All right, we are back again on Business. This is where we talk about the Metropol review. What sort of stories are you expecting to wake up to today, and what they mean? So quickly, let's cross over and see what the economy is looking like this morning. I have this one. World Bank says tough times for economy due to prolonged dry period. All right, we're going to talk about that as the day progresses. Second one, expect more dry days. Weatherman warns. The question is the weatherman getting entangled in the economy of Kenya in terms of not being precise? That is the question that most citizens are asking as per this morning, because we all expected the rains should have started from the weatherman. All right, next one. We have GDP grows, more cries from the middle class over the cost of living. The question there being, are they in the wrong economic class, and what factors are under play here? And if the economy or the GDP is growing, the question is, who is it growing for? If most people that carry the economy are crying. Next one. Let's cross over and talk about Kenya to benefit heavily from Sovereign Wealth Fund. We do know there is a proposal for Kenya to have the Wealth Fund. So the question is, what is the Wealth Fund? How does it operate? And how is it supposed to be utilized? Should we get it as well? All right, we cross over the other side. And we do have fire in Gikomba yet again. In our laments, we shall be talking about this, and you shall be getting updates as the day progresses on Metropol television. Last story that you expect to wake up: Brexit. What next? We do know that we have updates. We do know the extension has been reached. The question is, what next? But this morning, we are not concentrating on these stories, because this is what your day looks like. We are concentrating on one major issue: the state of the financial sector in Kenya. And to help us understand or put matters around these areas into proper perspective, we have George Bodo on Business AM this morning. I do believe if you want to understand matters, fiscal issues, economy, and interest rates, you cannot do better. You cannot get a better mind for that. George Bodo, welcome to the studio.
Thank you.
Yeah, how do you love our setup here?
It's lovely.
It's lovely?
Yeah.
I would like to think it's growing. This is 70%. Yes.
I would want to see the 100% then.
The 100% will be coming to your office every single day. Anyway, how are you feeling this morning?
Feeling well.
Somebody
Great.
asks you one simple question.
Yeah.
On a general outlook, what is the state of the financial sector, services sector in the country as per 2019? We do know the banking industry makes headlines every single day.
Yeah.
SACCOs are making headlines every single day.
Yeah.
And so when we look at all these headlines that we're getting faced with every single day, where do you put the state of the financial services sector in this country in 2019?
I think largely what we are seeing in some of the headlines you're seeing, it's a reflection of what's going on in the real economy.
Yes.
For instance, the banking sector, we have seen that, well, and they've been accused for making lots of money.
Yes.
The economy is not doing very well.
Mm-hmm.
I was in a forum where they came under sharp criticism. Mm-hmm. But if you see, if you look at the 2018 performances, you notice that some of the things are larger reflection of what we're seeing in the economy.
Yes.
And I'm talking about, for instance, the level of loan non-performance in the banking sector rose sharply last year. Mm-hmm. Last year, banks close to about 13% of their loans classified as non-performing.
Yes.
Which is higher compared to about 11% in 2017. So you're looking at about 200 basis point rise. Mm-hmm. And when you look at some of the statistics, like I was in the World Bank event when they were releasing the Kenya Economic Update.
Yes.
For 2019. Mm-hmm. And one of the key things they cited was the consumption. Consumption was largely a major driver of economic growth in 2019, in 2017. But increasingly, consumption is weakening, both at the household and the enterprise level. And that weakening of consumption, it's a reflection of a weakening, of a general slowdown in the demand side of the economy. And we can see that, and that's why we can see a rise in loan non-performance in the banking sector.
Yes. All right. Now, despite all that perspective, non-performing loans and a shortfall in demand, the Central Bank of Kenya still maintained the main lending rate at 9%. But we do understand that the factors that led to this is that inflation is still within limit. All right, the government says the economy is performing close to its best. That's fine. We do have the second lending rate date by the Monetary Policy Committee. That is at May 27th. So when you give the economy that outlook, do we expect for the first time, for the fifth time, to still have it at 9%, or do we expect a different figure?
Well, the thing is, before I answer your question, I think we need to look at some of them. Well, the monetary policy looks at a lot of indicators. But if let's sample out some of the headline indicators that they look at. For instance, consumer prices, which is reflected in annual inflation, has largely been very stable. But it's a bikini puzzle where it's a suggestion versus it's what it's suggesting and what it's hiding. If I look at non-food and non-fuel inflation, it's going down. It's going down, which is a reflection of a slack in demand in the economy. So, well, you look at the headline inflation, it shows you there's some stability. But if you go underneath, then when you dig underneath, then it shows you some other things. Well, for the monetary policy, it looks a bit anchored, which is okay. We are still below the target, the target of 5%. Current account deficit, looking good. We are under 5%. We were about almost 9% 3 years ago. But the question is, why is current account deficit down? Is it because we're importing less? Yes. Because most of the capital goods imports, which was largely going to the infrastructure projects, most of the infrastructure projects have actually are on a final close, and so import of capital goods has gone down, and that's why we are seeing capital account deficit narrowing down. So it's a capital account narrowing down just largely because of a reduction in imports. It's not a good story. It could be a good story when it's narrowing down because of exports picking up. Are we seeing exports picking up? No. We are in an expansionary monetary policy where the central bank has kept its policy rate at constant, or rather they maintain a neutral stance over the last 2 meets. My feel is that they are held hostage in their decision making, and they're held hostage by two things. One is the interest rate caps, because essentially the cap has disabled the credit channel. The credit channel is one of the many transmission indicators. Then that's one. Number two is that we're in a very dominant fiscal space where the government is aggressively borrowing domestically and externally to finance fiscal gaps. And so monetary policy is, in my view, is held hostage by these two factors. And so they can't do anything outside of what they're doing. So you ask me about my projection, is that I still see them being held hostage by these two factors. So I still see an expansionary stance going forward. But the question is, when you have an expansionary stance, in the more advanced economies, the expansionary stance is supposed to help consumption. It's supposed to, because What is interest rates? Interest rates is the cost of money. It's the
Yes.
price of money.
It's the price
now,
of money.
when you keep interest rates down, then you want to spur borrowing and by extension, spur consumption.
Yes.
The demand side of the economy. And when you have the demand side of the economy slackening in sort of in a slack, but you still have maintained an expansionary fiscal monetary policy stance. The question is, where is this going into?
Yes.
Yes. And the question is, I don't see where it's going into. And the way our economy is structured is such that you have it's a duopoly where you have a growth. We have a top class and you have the low class.
The low class.
Yes. So it's almost like middle class has disappeared.
It's almost
so
like
all of these benefits, where is it going? All
Yes.
this monetary, the expansion stance, who is it benefiting?
Yes.
It's benefiting the top.
It's just benefiting the top.
Yes.
So when we look at, it's another issue that now is a big issue in the country right now in the financial sector. So are we having a situation now, therefore, with the mainland rate being revised at the same figure, time in, time out? So are we at a place where we can actually say, therefore, that sub-Saharan banks, especially, are suffering, therefore, under high lending rates? Can you say that due to the economic factors you've actually put into face now?
Yeah. I think that they're not, well, I would say they're suffering because, well, high lending rates benefits them.
Yes.
Yes. But I would say that they're suffering more on two things. One is crowding out. Crowding out. We're seeing a lot of crowding out.
Yes.
Of private sector funds, and because they're supposed to fund their balance sheets from these same private sector funds, and when you have a crowding out, it means that they have to compete with the government for same funds. Yes. So for instance, if governments are borrowing a double-digit rate, that means that they also have to compete by offering a premium above that.
Yes.
And also they're suffering from that creates a funding problem for them. And those are obviously, as I mentioned, they're suffering from also the loan non-performance. It's a big issue for them.
Yes.
Yeah.
So let's talk about, therefore, how the financial sector is affecting the economy in the country. We do know that Kenya is an economy that runs on small-scale traders.
Yes.
But now, since the cap rate laws were introduced, you could sort of say, I want you to say whether this is a mystery or it's not a mystery. Now, is it true that banks are sort of going to go slow to sort of force the cap rate laws to be
I'll not say it's a go slow. I think that I still blame an aggressive fiscal stance,
Yes.
an aggressive fiscal era that we are in for much of what's happening. And I say so because when you have a situation where the government is borrowing at 13%, and the rate cap right now is at banks cannot price loans above 13%.
30, you cannot.
Yes.
Yes.
Now, I think for a bank, when you have government asking you money for 13% and some guy on the street asking you for money 13%, it's a question of, I trust governments.
I trust the government.
The government is,
Yes.
From a risk perspective, the government poses less risks to me
Yes.
than the guy on the street. So it's a no-brainer for them.
Yes.
And then also the cost of lending to government is low.
It's lower, isn't it?
It's lower because if I lend to the guy on the street, then I have to, the process of lending, the actual lending, it today, for a bank to do an actual lending, they're up to 4-5 steps that they have to do. They have to do, someone has to originate the loan, and they have to do a credit appraisal on you.
Yes.
Then they have to give you the loan. They have to feel that they're comfortable with the risk level as they perceive it in you. Then they give you the loan. Then someone has to monitor your performance. There's someone whose work is just to monitor your performance. Are you paying your loans on time? If you're not, what's going on? Is there remedial measures? Then there is, at the end of the chain, there is a credit collector who's always on standby.
Yes.
Just in case you don't pay.
Case
so you have a series of,
yes.
You have almost 5 people on one obligor. You have 5 people engaged.
Now
so there's a cost to it.
So there's a cost to that.
There's a cost to that.
Yes.
And then obviously, when I compare that cost to lending to government, obviously lending to government is less.
It's
less
less.
risky. I don't have to worry a lot of things when I give
Yes.
money to government. So the aggressive fiscal space, in my view, has partly to blame and has a lot of, should take a lot of blame on the lack of credit funding of the economy, on the lack of liquidity in the economy at the moment.
So now you turn around, therefore, when you look at that situation, you turn around, therefore, and say the government is also now trying to sort of find a solution to this. We do understand now that bank CEOs now might, all right, might face the court if they sort of...
Yeah, the banking charter.
Yes, isn't it? They backdated it. And now the government also comes in and says, well, we have that provision, yes, but because we want to do business with you, and because we do understand our economy also runs on these small-scale businesses, now why can't we therefore do a proposal, now we know that there's a proposal in the Treasury, that we can sort of guarantee a certain principal amount of the loans that you give to the SMEs. Do you think, therefore, that this proposal, should it pass, because I'm going to ask you whether it will pass, is a good thing for the banks to sort of operate within the economy?
Well, I have mixed views on guarantee schemes.
Yes.
And this is based on some observation I've done elsewhere. They tend to, the two things. One is that, well, psychologically, they give a boost in terms of lending.
Yes.
But they are also a moral hazard, I think, in my view. And even externally, my external observations, and they've done that in Nigeria, and also internally here, we have had affirmative funds. Yes, we've had the youth fund, we've had the women fund.
Yes.
It's the same concept, by the way. It's the same concept. The guarantee scheme is the same concept.
It's the same concept.
Implementation might be different, but it's the same concept that the government can decide to guarantee or can avail funds for own lending. Yes. The question is, how have those funds performed? They've not performed so well. And simply because of the moral hazard that it had, that the government has guaranteed. Yes. So therefore, even if I default, I don't have to worry about it.
I don't have to worry about much because the government say they're going to receive this money.
The government has basically underwritten all the credit risks.
Yes.
So I don't have to worry about it.
Yes.
Yes. And also the bureaucracies that is involved in government, because when government says the guarantees, that means they also have to look at every risk that they're guaranteeing. And they will not just onboard any other risk.
Yes.
And that will widen the turnaround time. And eventually, the amount of credit that will be disbursed on the back of such a guarantee scheme may not be as big as the one which is disbursed on a market basis.
Yes.
Yes. So, well, typically, well, it's good, but I'm not very bullish on it. I'm not very bullish on it because it creates certain constraints in the market.
Yes. Yeah. Coming from that background, therefore, do you think that once the minds in the banking sector, in the banking industry, will sit and look at this bill, do you think they will sort of push for it? Is it going to pass?
I think that it's when it comes to legislation, it's more to do with the members.
It's more to do with the members of parliament.
Yes, I think, and it's such a scheme. Probably for me, in my view, it will easily pass.
It will easily pass.
Yes.
Okay. Let's therefore sort of shift our focus from there and talk about the mergers and acquisitions that we've continued to see in the financial services sector. That you can count, there are now around 6 in the last 3 years alone. So when we look at this, the question that most Kenyans are having right now is, are the tier 1 banks in the country sort of able to absorb these economic shockwaves that are getting thrown at them? And is it possible for us to look at how these lower tier banks are going to survive in this sort of environment that is cap rated and the mainland already put at 9%?
Yeah.
Are we sort of trying to stifle them out of the economy?
Well, not explicitly.
Yes.
I think that in the current environment, the challenge that the small banks have always had is the funding, that they fund themselves very expensively. And then they were able to pass on the the additional funding costs to the customer.
Yes.
By the way, if you look at the way they used to price a credit before the cap,
Yes.
they were lending at very high rates previously.
Yes.
And it was primarily, in my assessment, a reflection of the kind of funding they used to have, the nature of the funding they used to have. And now when you have a situation where you cannot price at beyond a certain point, and then it poses a challenge for them, primarily because they cannot be able to recoup. And just to give an idea, is that almost 70% of the funding, and this analysis we did 2017.
Yes.
70% of the funding is institutional and wholesale. And what I mean by this is that they do a lot of purchased funding. The way they fund themselves, they go to the institutions, pension funds,
Yes.
and these are the fund managers, and these are guys who seek a premium for any placement they do.
Yes.
Yes. And so this penchant for institutional funding, and in the current environment, was bound to kill them, because the way they fund the price, they priced at almost double-digit territory. And now when you're picking a fund that a liability as, let's say, 10%, and the cap is at 13%, and you have a very small margin to operate with, and this small margin is supposed to factor in your operating expenses and the profit margin and your cost of doing business, they were bound to have a problem.
Yes.
Yes. So part of the adjustment that banks need to do after the rate cap was to actually look at their funding.
Yes.
And move away from the expensive institutional funding. And then also the second issue is that asset performance in the lower tier banks has always tended to be very low. They've always originated a lot of non-performance in terms of their assets.
Yes.
And also this was always factored in the pricing of risk
of their
lending rates. And you could also see this in the lending rates. And so when you have a situation where you cannot price beyond a certain, then they have a lot of constraints. They have a lot of constraints. They will start bleeding money, and we've seen that. 2017, if you look at the figures, the bled money. 2018, the bled money, and so the question is, how sustainable it is? How long can they keep being this in this state? And that's why you're seeing a lot of a drive towards them being acquired.
Yes.
And them,
get
sort of a horizontal acquisition.
Yes.
Yes.
So now, when we look at this situation, therefore, now banks are the top tier banks. They've not posted profit warnings. Actually, they've posted profits in 2018.
Yes.
All we're waiting to see what happens in 2019. Yes, but we do know that some of them, Equity Bank was the one that gave us their profit margin the other day. They have met profits. So when you look at this, and they are saying the way that banks have sort of found a way around this is close eyes on these high risk areas, and that is the economy itself. That's the small scale traders that have sort of been the main beneficiaries of lending and spurring the economy, and these lower tier banks.
Yeah.
So is the government at the same time trying to lessen the lending rates in the country, but in one way or the other making situations complicated for the economy to grow?
No, I think, and I've said this, I think that the government's action has crowded out the private sector. And that's primarily to blame, because when you look at, for instance, commercial banks' activities last year, look at the balance sheet activities last year. Commercial banks last year lent government in excess of 140 billion shillings. That's just the government securities that they purchased. They purchased additional securities worth 140 billion shillings.
Yes.
They only lent about 90 billion shillings to the real economy.
Yes.
So you can see where liquidity is heading into. It's all heading into treasury.
Yes.
It's all heading into treasury. And what that does is that it denies the real economy. So I think my view is that the price caps are there and they can work if the government can de-escalate its fiscal aggression.
Yes.
It can work.
Yes.
If I'm imagining a situation where the government is borrowing at 7%,
yes,
and the cap was at 13%, that's a disincentive for banks to accumulate
Yes.
exposure in the national government.
So to sort of cap this conversation, therefore, are we saying that in Kenya, the price leadership model, where banks are led to sort of price their loans, sort of assess their risks to the customer that they want to give their loans to, is not a good business model in Kenya for the banks? And what sort of risks can you foresee? Because now, if you look at what the lending rates and cap rates are trying to move forward to, is a different model where it's already standardized. So the price leadership model, where banks are led to therefore assess risks and find a way to operate within. With the economy running in that direction, what sort of risks are we getting ourselves into when we look at it in terms of financial services?
I get your question. The thing is that the price caps is a response to failure by the banking sector to migrate towards a risk-based model.
Yes.
In this country, I think we are very mature in terms of credit referencing. I think we're now at an exhaustive level where the bureaus can even give you
yes.
the probability of default of an obliga.
Yes.
I think with that level of maturity, I think we would have migrated into a risk-based pricing, and that's what even the Central Bank has been urging banks to migrate to a risk-based pricing, and which they failed to do,
yes.
which is a mistake. But I think that, to answer your question, is that I think a more sustainable model is if they move to a risk-based pricing model.
Yes.
So what I mean by that is that if your credit score is X, then I'm going to price you Y. So it's sort of introducing pricing bands. This score band will give you a pricing X, which is clearly defined. So then it encourages people to accumulate good credit scores. Yes. So then if your score is good, the better you score, the less risk I see in you.
Yes.
Yes. Well, because they failed to do that, then we have this where you are capped.
Yes.
Then you say, if you can't move into a risk pricing model, then let me cap to the extent to which you can price your loans.
Okay.
Yeah.
All right. Now I have questions that are coming in. All right. I'm just going to read them. These are people trying to understand exactly what it means with this lending rate and the cap laws that the banking industry is now operating under. Now, I have one question from one called Momanyi. Momanyi says, I have no business. I am employed. Why should this conversation matter to me? Yes, that's one question that I have from Momanyi.
Well, it should matter because, well, the next time he's going to get a mortgage.
Yes.
I might tell him no.
I see
too
now.
Risky.
Yes.
Too risky. So
yes.
It's an important conversation for him, and it's important that I think from his question he needs to understand that the way we are today, it's important to accumulate a good score, so that when the bank go to the bank, you can actually argue. You can bargain. Look, my score is really good.
Yes.
You should not be pricing me at where you want to price me.
Yes.
Yes.
Second question that I have for you this morning. I don't belong to Equity, KCB, or Cooperative Bank. With a lot of mergers and acquisitions that have happened, should I be worried now that I belong to a bank that is not in the top, that's top tier banks?
No, should not be worried.
You should not be worried.
Should not be worried. There's nothing to worry about.
Yes.
Yes. The mergers and acquisition are largely commercial decisions.
Yes.
And doesn't the way it comes to the customer is in the service that they see.
Yes.
Yes. But from his question, no, I shouldn't be worried that his bank is not in the top tier.
Yes. All right. And that is the conversation this morning. Guess what? I have a lot of your questions coming in. What we're going to do is that we shall be sharing the Twitter handle for George Bodo. After that, we shall be talking more on social media. Get to us. His Twitter handle is right there. Talk to him. talk to us as well. All your questions, we are forwarding them to him right now, even as more keep on coming in. Business AM takes a short break. Once we come back, let's talk technology and conversations around circles and networks. To Business AM. Today, we talk circles. Not the headlines they've been making of late. We do know that you understand them. We do know that we've spoken about this on Business AM. We are looking, therefore, at finding solutions to these problems. We're looking at making circles catch up with the banking sector. And since today is Technology Thursday, let me therefore officially take this opportunity to welcome on to the show the first woman expert, the first woman business expert, the first on Metropol television. Madam Nora, it's history for you.
Thank you.
There's no lady who has ever sat here. I know they're supposed to come in. Yes, but you're the first one.
Oh, thank you.
Thank you for opening the seat.
I'm honored.
I'm honored to have you here.
Yeah.
Anyway, let's get straight into it. Where did circles lag behind when it came to digitizing? Because the banking sector has met steps.
Okay, so Simba, the first thing that I must make very clear is that circles are not banks. Circles are a very different financial services industry.
Yes.
Operation. If you look at circles and who they target the people in the grassroots. And these are the people who will not walk into a formal bank to save their money. But they target them because these people have a little amount of money that can add up and grow into something bigger, and they make tenfold out of that.
Yes.
Okay? What the biggest misconception we have is that we compare these circles to banks because circles hold a lot of money and they're deposit taking.
Yes.
But if you think about the other way, what they deliver to their members, the way they deliver the services to their members is very different from a bank. Think about it this way. Circles will hold AGMs where they get feedback from their members on how they should operate. It is not some people sitting somewhere making a decision for them like they're a corporate. No, it is the members who drive how the circles operate. So there's that personal touch. There's the personal touch from a delivery perspective. There's a personal touch from how they account for the money that they've collected from their members.
Yes.
Yeah. So from a digital perspective, what circles have done is they've already adopted technology. But the thing is, we need to get them to move to the next level and leapfrog so that their services are better to their members.
Yes.
Yeah.
All right. I want us to get straight into that.
Yeah.
And I know I asked you this off camera. There are people concerned that, look, yes, we've been members of circles. We've trusted their business model because of what you're saying. They sort of talk to you. They serve you. They don't give you a product. They sort of hold your hand. Right? We know you are this. We talk to you. But now, when you see headlines about mismanagement and misappropriation of funds, is this what now technology will probably come in and solve?
Yeah. So the thing with technology is about transparency.
Yes.
Okay? The thing with technology, it's self-service. The thing with technology, it's accessible from anywhere. If you hear about things called cloud computing, it means you can access technology from anywhere at any time. Whether it's on your phone, whether you're sitting on a laptop, it doesn't matter where you are, you can access it. Technology will make a big difference to how circles operate. Circles have adopted some level of technology, but circles need to move to the next level of technology where they offer self-service to their members and are transparent to their members. So that if I have a question today, Simba, okay, I need to check immediately and have an answer immediately because we have become an instant gratification society. Yeah? So because of that, And because of the level of grassroots that SACCOs operate at, and because we are lucky enough to have connectivity anywhere, anytime in Kenya today, and we have affordable phones,
Yes.
it should be okay for anybody to access any information they need about their SACCO or about their SACCO account through technology.
Yes.
And this is why, as an organization, CIO East Africa had the first SACCO Tech conference yesterday. We are trying to create conversations, educate members of the SACCO, especially CEOs and board members, to understand the importance of making technology a partner to their business.
Yes.
A partner, not a cost. A partner
to their business.
to their business.
Yes.
Yes.
That's my next question, therefore. When you look at banks, I know we have banks. Standard Sanchez the other day was launching an accelerator innovation hub that looks into innovation within the banking industry, that is technology-wise, and even awarded leading women in tech business.
Yeah.
When you look at it, is it okay? I know you're talking about partnerships. Is it okay for these SACCOs, therefore, because we do know the areas we want to solve, for them to own these fintechs, come in and then give us a solution to this, as opposed to partnering with them? What sort of model will work for the SACCOs in the country?
So let's step back a little bit.
Yes.
In order for any organization or any business to come up with solutions for
Yes.
their needs, they have to know where the problem lies. Okay?
Yes.
So there's an organization, and this is a PhD student called Dr. Brian. Dr. Brian is doing research on SACCOs. In fact, cooperative movements across sub-Saharan Africa. He's trying to find out where their pains are,
Yes.
where technology can plug in, and what the future of SACCOs is.
Yes.
So by the time Dr. Brian is done with this paper, this is going to open a lot of eyes for our SACCOs. Remember I said, SACCOs have a certain level of technology, but they need to leapfrog. They don't need to take the same steps as all other financial institutions have done.
Yes.
Okay? Now, from an innovation perspective, once SACCOs have feedback on this research, because I can bet you it is going to be quite extensive because it is across sub-Saharan Africa. So this is not only a Kenyan problem. And please note, Kenya is one of the best performing SACCOs
Yes.
in Africa. And if I'm not wrong, maybe across the globe.
Yes.
So we are doing very well from a SACCO cooperative movement perspective. But we need, just because we are doing well doesn't mean we can't do better. So once we get insights from this research, then they can start thinking about some of the solutions they need. SACCOs are unique. SACCOs do not need to have their own innovation centers. Remember, Kenya is a technology hub. We have kids doing all sorts of amazing things where they are. You and I have been brought up in the SACCO era. Now, because of that, their children sitting somewhere coding something for SACCOs. All the SACCOs have to do is call these guys in and maybe state their problem, and then the kids can come up with a solution for them.
Yes.
They do not have to have an innovation hub. That's number one. Number two, let's not forget what their core business is. Their core business is not technology. Their core business is to grow your money, to give you access to funding at a cheaper interest rate so that you can grow your business, take your kids to school, build yourself a home, do whatever it is you want to do. Their business is to hold your hand. So technology is just an accelerator for them. Yeah? So if they start going into innovation hubs and things like that, then they lose focus
Yes.
on what they're supposed to be doing. You try and explain to a mama mboga why an innovation hub has been opened with her money. Think about it. It will not make sense to her.
You'll have questions, isn't it?
Yeah.
Now, let's therefore digress, sort of in the same line, and look at this issue. We understand our Kenyan economy. It's now filled with micro lenders who are running under this slogan. We are digital. You can get your money instantly. We can even show you how we calculate it. Are we therefore having a situation where, even if we are trying to sort of introduce more tech to accelerate SACCO's business and sort of draw more people inside and make them more sufficient, are we playing a catch-up game now that we have smaller lenders who are coming in and drawing people out of the SACCOs through giving them easy digital solutions? Get your phone, send us a text message, we'll be right there with you with your credit. Okay.
So these mobile money lenders, I want I'm going to spin this a little bit.
Yes.
Think about their interest rates and think about SACCO interest rates. It's very high. That's number one.
Yes.
Think about how much you want to borrow and how much you can borrow from a SACCO. That's number two.
Yes.
Think about the personal relationship. Do they know you? They don't know you, unlike a SACCO.
Yes.
So that's the difference between mobile money lenders and SACCOs.
Yes.
Okay? A SACCO will give you a loan that is a huge amount of money at a very low interest rate.
Yes.
And by the way, don't be confused. They know you because you're their member.
Yes.
They know you. They know everything about you.
Yes.
So even the time to turn around that loan is very short. Okay? They are also into mobile money lending. A few of them have already started. And they even go up to amounts of 120,000 shillings because they know you, they have your history. And the great thing about SACCO's lending versus mobile money lending is that a SACCO will lend you money, quick, low interest rate, and will walk the journey with you. A mobile money lender will give you the money. They don't know who you are. They are using data analytics, okay, and artificial intelligence and all that stuff. High interest rate, and when it's time to pay that money, you're going to pay that money at that high interest rate.
Yes.
And immediately we start looking at things of if you don't pay it on time, from what I hear, they start calling your friends, you're blacklisted.
You're blacklisted.
Yeah, and
Yes.
economic times are hard. So one has to be very careful about, as I said, instant gratification.
Instant gratification.
Be very careful of cheap is expensive, quick is expensive.
Yes.
Yeah.
So let's spend some mind on technology. Look at the SACCOs, therefore. The question would be, what sort of tech-driven SACCOs do we see are we going to see in the near future operating in Kenya?
So, first of all, in Kenya, I'm actually, I was very surprised to find out we have over 100 SACCOs.
Wow.
Yeah.
100 SACCOs.
100 SACCOs, and it looks like the SACCO movement is, it's a trusted way that Kenyans have adopted to save their money.
Yes.
Okay? And out of these 100 SACCOs, obviously there's a lot of, they're deposit taking, okay? We'll see a lot of these SACCOs adopting technology because they need to do great projects with the money that they collect.
Yes.
Big projects that will transform this country.
Yes.
Okay? Transform the lives of their members. Let's look at like the Big Four agenda. Okay? The Big Four agenda, we're talking about things like food security. Okay? Now, if we're talking about food security, if I'm a member of a SACCO and I'm a farmer, it means I can borrow money, do my inputs, buy my seeds, harvest my products, and in that situation, if my SACCO is digitized, it can even create a marketplace for me immediately. I don't need to stress about it.
Yes.
Let's say I'm a contractor. I can borrow money from my SACCO at a low rate,
Yes.
build the houses, create low-cost housing, and the SACCO will create for me the marketplace. So there's this ecosystem that will be created by SACCOs, especially when they go digital. Yeah? And the idea is to create a 360 satisfaction for their members and improve their lives with the little money they've put in.
All right.
Yeah.
Thank you very much. Here's the thing.
Yeah.
I can't believe it's been 15 minutes already.
Wow.
That's how this is. My managing editor and I are seated down, analyzing the document that we have in our office.
Yes.
Sooner rather than later, we shall be calling you to sort of express deeper on these issues. Thank you very much for gracing Metropol Television. We're still in contact.
Thank you, Simba, and thank you for having me here.
All right, here's the thing. That is the CEO, CIO East Africa. All right, you know her Twitter handle, talk to her. Anything SACCOs and digital movements, talk to her. She'll respond to you and sort of give you an outlook of exactly how we are moving forward. I have questions that I've not got time to analyze because I know you're a very busy person. In fact, we've eaten 2 minutes of your time. So I want to run out. I'll be sending you those questions and then after that, responding on social media as regards these questions. Business M takes a short break. Once we come back, we move away from the FinTech Forum, all right, and then talk about networks. Why is it important, even though we talk about SACCOs, therefore, to understand 4G and 5G and also know those networks, how they affect the weight of the money in your pocket. We take a short break. welcome back to Business AM. All right, this is the only show where it's actually on Thursday we can carry our phones and sort of go through them as we talk to you. Here's the thing, we are talking networks, 4G, 5G. Why do you need to understand them? What sort of business are we able to run on these networks? And why we are talking about them this morning? And where does Kenya stand in this space? All right, to help us get that into proper perspective, we have Korea Biggie. I don't think this is the last time he's going to come on the show. All right. Hello, sir. Welcome. Welcome. Have you taken coffee?
Yeah, I have.
You have taken coffee?
Thank you.
Yeah, we have people. Make sure that you take coffee before we come into the studio. But sure. I'm happy to have you here.
Thank you.
Let's start. It's only now that our service providers in the country are telling us, you need to be on 4G. 4G is faster, it's better, it's way good. Yeah. But we have devices that are running or getting manufactured right now that support 5G networks. So now you want to upgrade your phone, but then you look at the specs and then you see it's 5G enabled. So you ask yourself the question, where do I go in Kenya to get a 5G SIM card or 5G network support? What is this 5G and 4G that we're talking about?
Actually, 5G is still on pilot mode. It was just released April officially, and it's on a test.
Yes.
On phones, I don't think you can still run it. It's only on home, they call it routers.
Yes.
First and foremost, 4G is not yet perfect.
It's not yet perfect.
Yeah.
Why do you say that?
We've not achieved the speeds that's supposed to. A minimum of 4G, it's supposed to be a minimum of around 100 Mbps.
Okay, let's go back. Let's go back. Let's go back. Numbers are getting thrown.
Yes.
4G is supposed to be 100 Mbps.
Minimum.
Explain that to me as somebody who knows nothing about numbers.
In network, there's something called downloads and uploads. On an upload, you can get at least 500 Mbps. On an upload, you're supposed to get around 1,000 Mbps. That's like 1 gig.
Yes.
And the other one is like, let's say something like, okay, 512, something like that.
Yes.
So far, so good. We're still struggling with the technology.
Why are we struggling with 4G technology in Kenya?
It's not even just in Kenya. That's in the world.
That's in the world?
Yes.
We are struggling with 4G?
Yes.
Why?
That's why actually they launched something called 4G Lite. Actually, it's not actually something advanced. It's not advanced at all.
It's not advanced?
Yeah, it's just to state that it's still under construction.
I see now.
To perfect. Just the other day when they launched 4G, they did 4G Lite A, advanced.
So I mean, we might have 4G
We'll take time.
Lite C.
Not really, because normally in generations, it normally take 10 years to move from. Like we did 1G at 80s, that's when the network came. Those phones with the small antenna.
Yeah, I would see that.
And then we came to 2G.
Yes.
That's when you got now the Nokia 3310 and stuff.
Yes.
You could be able to text.
You could be able to text?
Yeah. Then we went to 3G.
Yes.
That was the iPhone 3G.
Yes.
Now you could at least do some internet,
yes,
some research and stuff.
And send a picture.
Yes. Now we came to 4G. That's on the 2000 era.
Yes.
Now you could do the videos, the HDs, you could do the social media. Yeah, but it's not yet perfect.
It's not yet perfect.
Yes.
That's fine.
Yeah.
When you want to understand 4G network and the sort of business that somebody can run under 4G. What sort of business? Let's talk about tech business. Let's talk about anything that 4G can therefore support. What are we looking at?
It can do a lot because we're the first generation to discover the technology and to start running these things.
Yes.
So you can do graphics, you can do HDs.
Yes.
It has improved the speeds. Depending, but it comes in handy with the gadgets and the equipments that you're using. Having 4G itself doesn't just run things.
Yes.
You need to have equipment that can support.
That can support.
Yeah. You need to have a SIM card which can support that. You need to have a handset that can support that. You need to have a router that can support that. Yeah.
All right. So let's talk about the state of Kenya when it comes to supporting 4G.
Yeah.
There are places you go to and then you find that your phone has changed from 4G.
Yeah.
Every time I travel home,
Yeah.
I cannot open any application that runs on internet because I'm not 4G enabled.
Yeah.
So most of the applications and the phone runs on 4G basis. But once you go home, even opening an app, even a taxi app, is very difficult. It doesn't support that. So when migrating, because I know Kenya is still in the process of migrating to 4G. Does it mean therefore that we have to start laying the cables, we have to start acquiring new SIM cards, we have to start acquiring new phones? What is the sort of infrastructure that is needed for the country or a business to move from 3G to 4G?
First, we need the service providers to raise the infrastructures.
Yes.
Those are the beamers, those satellites that you see. As many as they are and closer they are, the better it is. Because the signal travels through waves of frequencies. So the farther you go from the satellite, the farther you lose your signal.
No wonder. Every time I go home, therefore,
Yeah.
because the 4G satellites are probably not set up there, then I start losing the signal.
Actually, the satellites are there. It's just a gadget. It's a very small equipment.
Yes.
They just need to add on their satellites
I
because the
see
infrastructure
now.
is there. But though there are some areas still, you see, signal it's normally affected by buildings, trees, rain.
I see.
So the more mountains you go through, the more forest you go through,
Yes.
the lesser the signal you get. So because there's a barrier, basically it's a barrier. So the service providers should actually invest
Yes.
in their beamers and stuff. And then you, as an individual, you have to invest in your handset or the equipment that you're using.
I see.
For you to get there.
Okay. All right. Let's downgrade further. Come to this 4G now. Let's talk about what does it mean? Because every time somebody tries to understand what 4G is, they're told about latent speeds and the amount, the number of connections that this network can support. That's what these tech providers will tell you. Look, you need to move away from 4G, sorry, 3G, because 3G has the worst latent speed and the amount of connections that you can do on 3G is not really that good. All right, now we have 4G. And they're telling us, you need to be here because this is the place. You're saying 4G is not even yet ready.
Yeah, it's not really perfect.
Should we be excited that 5G is getting piloted?
Yeah, we should, but we're still way far. So far, so good.
Yeah.
The only one phone that I know can do 5G, and it's not yet even, it hasn't even worked, is the new Samsung 10.
Yes.
And actually, you have to put a certain cover on it for it to reinforce.
The 5G support.
Yes, it's a backlink cover.
Yes.
For it to run. And we don't have the infrastructure for that to start with.
Yes.
So the only way you can use 5G actually currently,
Yes.
and its test, is through a router and home internet.
Home internet.
Not the gadgets
Not
themselves.
Now,
it's way too far.
Yes, that brings me to the second conversation, therefore. We do know that internet penetration in the country is really good. We have internet service providers who are now sort of penetrating this market of offering internet to Kenyan consumers. Question is this. Every estate you go to, you sort of see connections going on and people trying to figure out how to get internet to people's homes. Now, should we start talking about 5G? Does it mean that these internet providers, again, have to go and start laying new infrastructure, and that therefore means that we have to talk about the cost? Does it mean laying new infrastructure for us to support 5G?
Not really, but though 5G, don't expect it anytime soon.
How long? Do we
Around
have to wait
5
for it?
years.
5 years?
Yes.
Wow.
Yeah, for real. Because it's way too far.
Yes.
It's way too far. You know, a minimum of 5G, we are talking of a minimum of 5 GB on the lower side and
On
a
the
maximum
lower
of
side. 20
GB
Wait,
per
I
second.
have to understand. 5G, we're talking about a minimum
Of 5 GB.
5
per
GB
per second.
per second.
Yes, that's on the lower side.
That's on the lower side.
Yes.
Okay.
On the higher side.
On the higher side?
20 GB
Wow.
per second.
And these are upload and download speeds.
Yes.
So let's therefore talk. What does 4G support in terms of
1 GB maximum.
1 GB maximum?
Yes.
1 GB maximum.
Yes.
The people who run online businesses, the trading services, and that sort of need you to have strong streaming services that sort of keep you on the loop time after time, where you're constantly getting the feed.
Yeah.
Is it possible for this to run seamlessly on 4G?
Not really, but
Not
they're
really,
trying.
but they're
Because
trying.
you see the cable itself, just the other day we achieved the 100 megabytes per second.
Wow.
Just the other day. And not everywhere.
And we're targeting 1 GB.
Yes.
Way
And
far.
that's on cable.
Why?
And then
Uh-huh.
remember, when you're transmitting on a wireless system, it's much slower and have more interruption than cable itself.
Okay.
So the risk is too high.
The risk is too high.
We have we have too much to deal with.
Yes. Can I ask you a question therefore?
Yes.
What is making Kenya, sort of all the world, let me say that,
Yeah.
sort of lag in terms of, because you're saying that we have to wait for 10 years before we see another 5G.
Yeah, it's always 10
5G,
years,
probably
10 years.
we have to wait for another 10, 6 years now for us to get it. What makes somebody understand what makes this sort of lag?
The infrastructure.
The infrastructure.
It's very important.
Very important.
You see, these signals you're transmitting, these are
Yes.
frequencies. We need a lot of beamers,
Yes.
less interruption, and so fast. They're called what? We have some satellites.
Yes.
The closer they are and the many they are,
Yes.
the better we can transmit. And we don't have that yet.
All right. So now I'm just going through some questions
Okay, kindly.
that I received yesterday. So now we help people understand.
Okay.
Okay. All right. I have one question. I'm sort of trying to get it. I was told that I have to ask you this question. Okay. Here we go. Here we go. Yes. There it is. Here's the thing. I don't have a phone that supports 4G yet.
Okay.
But here's the thing. When I compare that with what my friends have on their phone, my WhatsApp has never gone into hang mode. I've never had a delay in terms of my YouTube streaming.
Yeah.
What does it mean because I'm still on 3G?
Just like I said, 3G used to be, okay, it's a perfected technology.
Yes.
Actually, it's just the difference between a 3G and a 4G, it's a very narrow thing.
Yes.
Counting 4G is not yet perfected. They are just trying to migrate to.
Yes.
It's like living in a 2-bedroom house and a 1-bedroom house. Just a different of one
difference
room,
is
but the
just
same
one room.
Yeah,
Yes.
it's the same concept, same everything.
Yes.
And are you not straining your phone?
Yes.
You see most of the guys and most of the phones nowadays, they'll tell you it's 4G and stuff. But when you look at the bundle inside and the technology, it's not yet up
It's
to
not yet
the quality.
up to the quality that it needs to get down.
And then at the same time, our provider and the SIM cards they're giving.
Yes.
And like now, you can do a nice 4G in town.
Yes.
Just outside town or even in a massive building, it just disappears. You drop down to
see
3G
now,
because
3G
it is already
wow.
supported in 100%.
All right. Next
So
question.
you'll find he's doing better
He's
because
doing
it's
better
more stable.
because it's stable.
Than
Because
the
we
other.
took 10 years to perfect it, and then
exactly.
we said, now this is good, let's explore 4G.
Yes.
So 4G is still in the process of getting perfected.
Yes.
Next question. All right. My phone sometimes
Yeah.
indicates H
Yeah.
on the bar.
Yeah.
Sometimes indicates G
Yeah.
on the bar.
Yeah.
What does this mean?
Hotspots. It's almost like let's say what? It's a plus. Normally it's going to write H plus.
H plus, yes.
Yes, the signal is not so bad and it's not so good, but it is stable.
Yes.
It's in between a 3G to a 4G. A G, it's automatically just normal 3G and below and something.
Yes.
Yeah, that's what speaking of 2G, 3G there. Try give and take. H plus, it's 3G to 4G in between.
Yes.
It is struggling to understand whatever it is.
Okay.
Yes.
Some of these questions I was able to answer, but this one I wasn't. And that's the last, and this is the last thing that I'm going to ask you today. When you look at the gaming sector
Yes.
in the country right now, I know they say they will know that because he's a tech expert.
Yeah, yeah.
I know now even Microsoft is introducing games that you can sort of stream online.
Yeah.
So they're asking me, since our 4G network is not really that stable,
Yeah.
what sort of capabilities do we sort of expect from these streaming services, probably once we have a nice 5G or a good 4G?
A good 4G, but the fastest way to stream
Yes.
and to do Right now, we are doing games under virtualization. Like we do the VRs and the remote things.
Yes.
The best way to stream, it's through cables, not
Through
wireless.
cables, not wireless.
It's not yet perfect.
Yes.
You're going to strain your server, you're
Yes.
going to strain your network, less of connection, delays, you know, there are those delays.
Yes.
It's like, let me give you a good sample. When your journalist is outside there
Yes.
and you're trying to communicate with him, you have to talk and then you have to wait for a minute or two
Yes.
for them to respond. That
I
delay.
see now there is that
distance.
delay.
Yeah, you have to wait and like, can you hear me?
And then wait.
Then yeah, they respond.
They receive.
Then you
And
speak
then
again.
they speak and then
that
you wait
delay.
that delay.
Yes, because it's wireless.
Yes.
Unlike you have a cable and someone else is standing in front of you, like they were communicating.
Yes.
It's way much easier.
It's way
it's
much
direct.
easier.
It is
direct.
Yeah, there's no bridge in between.
Yes.
There are no interruptions.
Okay.
Yeah.
Thank you very much for coming. There's a guy called Joel. He's a main graphics head of department.
Yes.
Every time we argue with him over these things, I know one thing that we're going to talk about next is computers with processors, with processing speeds,
Yes.
with everything that touches on computers, whether it's okay for you to go for a Core i7 and all that. Guess what? This, we're going to welcome you next.
Thank
this is Business AM. Every time I get to Technology Thursday, I get excited. Here's the thing. I've seen the smallest phone I have ever seen. Can I borrow your phone?
Sure.
This is the thing. We clear the show by showing you this phone. Have you ever seen a phone this tiny? Next conversation. Are we going tiny in mobile phones? Business AM comes to a close on that note. Meet me at 1 p.m. as I give you the business briefs. And tomorrow as we talk personal development, and that is careers. What do I say? Good day. Good morning.